NASDAQ is down just a bit. Oh, that's the S&P's down just a bit. The NASDAQ's down a bit. Nobody, it's no big deal. No big deal. Oil is 90.06. Brent is 93.53. Gasoline 310. Look at natural gas, though. Still flying from this morning. See what happened? This is a contract rollover. So the people who still had natural gas contracts that were long for June delivery, because this is probably July. It's May. I don't think this was still May. Maybe it was. I don't know. I don't know what the front month contract is. I should just say prior month, so I don't. That way, it can't be wrong if I say prior month this month. All right, here's natural gas. Here's no expected. It's just slow. May, June, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. How can it be all these days? What do they have a freaking contract every day now? All right. So June 25th is the start of the July contract. So this contract is now, we're in the June contract. So when we're looking at NG, we're watching the June contract. That answers that question. So this was these were the May contracts, and I guess these are for June delivery. The June contracts would be for July delivery. So what happened is people who are long on natural gas and have contracts, if they don't close them at the end of the period, which was yesterday, if they don't close them, then they have to accept delivery. And obviously, a lot of people are speculating, so they have to get out. It's just like an options contract, really, except the difference is instead of having stock delivered to you, you have to physically accept the natural gas delivery. You don't have a choice. And you can't change your mind. You're going to get this, you will have to accept the natural gas. So if you're just a trader, you absolutely have no ability to take the gas. So therefore, you must dump your contracts at the end. So that causes this sell-off from 299 to 288. So it's a pretty big move. Not that it doesn't happen more than once, but it's a pretty good move in a sell-off. And you could have predicted this would happen. It's interesting. I mean, I was going to say, if you remind me in chat, we could look at it next month. But if you catch the actual rollover day, you could probably do this all the time and pick up a long. But don't forget, this is a different contract. So this contract wasn't down here yesterday. It was the May contracts being dumped, and the June contract probably looked pretty contiguous going through. But still, there's going to be this selling pressure and then a snapback anytime the contracts roll over like that. Same goes for oil because people physically can't take the delivery. Now, interestingly though, in oil, you have to consider the fact that that the war is a complete wild card. So if you think the war is ending in the next 30 days, it actually could be cheaper because right now there's still a real shortage of oil. In 30 days, it may be considerably easy to buy oil. So the contracts could be completely screwy. And that's why we were watching the NYMEX strip at one point. I don't think I still have that up. Here's the EIA. Let's take a look at what the oil inventories are. Is this today? May 15th. That sounds too far along. Refresh. Still says May 15th. Doesn't sound right. Release date May 20th. No, there should be another one. Oh, next release date. What? Oh, because of the holiday. Oh, it's a day late. Oh, well. So we're not going to know. So this is the same one we looked at last week. No need to review that again. What else is going on? Oh, remember we had a spread? Let's see what's going on there. I think we were waiting for some. Oh, see, everything filled, right? And feel like something's missing. Oh yeah, we never filled the short-term put because SoFi popped up. And for UNG, we filled the spread the way we wanted it to, and that should be in good shape. This one's up $3,700. And what is that? Looks like a 2,000. So this one's up $3,700 and this one's down $1,700. So on the whole, we're up $2,000 on that spread. It's only 2 weeks. That's very good. SoFi is chugging along. SoFi's at 16.25, and we sold the $20 call, so they're not likely to come in. Oh no, wait, it's January 28, $20 calls. Oh, we sold the July $15 puts. We're above those. Oh, we didn't sell the short calls because we didn't want to, I don't think. Let's take a look at SoFi. I think we were waiting for it to pop more. What is this? Nothing is position. We have the short calls there, and we have the long spread here. See the short, there's the short call, there's the short puts, there's the long spread. All right, so now we got to look at it again more carefully. See, this is a problem with not using my spreadsheets because when I use the power options, it's very, very clear. To me, it's very, very clear, what we're intending to do with the spread. When I have to look at just this, it's a little annoying for me. But obviously, we have 25 longs. We have 10 shorts. Nope. Well, we have 10 shorts, though, so it's a 10-20 spread. We have the $15 puts in 2028. And we sold the July $15 puts, and we put off, and we weren't ready to sell the short calls. Oh, and I can see why. Okay, yeah, because we wanted to pop more than this. So it's going okay. We only started the trade like a week ago. So it's going the way we want it to. We would just like to see it go a little bit higher. Earnings were April, and they were reasonable. And guidance was not exciting. That's what hurt the stock. But we think that they're growing, and they have an undeniable amount of growth. Last year, the PE was 36, or this year, or probably the close of this year, they're 36 times earnings, but their forward PE is 20. That's like 100% better profits going forward. I mean, what do you want them to do? So, yeah, I think it's reasonable that we should expect them to come back around 17.50 before we sell any short calls. And so we're just going to give it some time. I think it's a low risk open trade. We just discussed in the chat room, in fact, CLF, look what happened to them. They went flying. So, when people suddenly realize what value is, they can go flying. And the 4P on CLF is not exciting, but everything is going their way. And this is what I said about them at the time when we started the trade. I'm like, everything is in their favor. I don't know why they aren't doing better. And they finally started doing a little bit better. Because they the tariffs and everything are totally in their favor. They're a U.S. Supplier. So it makes sense that they should do well in this environment, plus the massive infrastructure building and so on and so forth going on. There's no reason this should not be a successful stock. That goes for Freeport as well. What? No. I was getting into arguments with the computer. Freeport, like SoFi, their PE, their trailing PE is 33.73, and it drops to 16. So that's 100% increase in profits. That's what that means. Because the E doubled, which caused the PE to half. That's because the price doesn't change. You're just changing what the expected earnings are going to be. And, in fact, right there you can see PEG 50. That's a phenomenal PEG number. Price earnings growth. That's what that means. So one is flat, and 50 is phenomenal, and 50 is doubling, and even 2 is a pretty acceptable number on these things. No, not 2. Wait. Oh, whatever. I'm sorry. You just got to see what the numbers are. I forget how that calculates, frankly. Multiple top. So these guys are doing well. They're probably going to break out. This is what we call a triangle squeezy thingy in professional TA terms. And the triangle squeezy thingy is going to cause usually a violent break. It's going to consolidate. It's like that game Breakout, it's going to go bip, 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 and until it gets to the little point of the triangle, and then it's going to pop one way or the other. And then you just kind of think about it and say, well, why would they pop down? What would happen to FCX that would cause it to pop down? Copper's at a high price. Everything's going well. Their earnings are pouring in. There's no particular reason that they should go lower than where they are now. They should be going higher and retest this top and probably this time succeed. So not a bad time to take up a position in FCX. So why don't we do that? How much is FCX? That might be a reason. 63, that's a lot, but we'll do it. All right. So then we go to FCX. Although I just did look at, how much is CLF? I did just say if CLF was as a new trade, is there a good one? Ooh, that's good for the $700 a month portfolio. We already have it there, actually. Wow, that's a good price. But let's take a look at FCX just since we're talking about it. So FCX, here's how you do the trade. I know I want a long position. So I'm going to say they're at 63. I think they should be around 20x. So let's say this is 17 and 3 more is about almost 20% up from here. So notice it's not a science, right? I'm like, yeah, close enough. So 63.5 times 1.2 is 76. So let's say 75 is our target. So now we know what our target is. And now we're going to take a look. So the 75s are, yuck, that's a wide spread. If you don't know what it is exactly, if you don't know where it's going to go, there's a couple of things you do. First of all, it's 12 and 1360. So it's $1.60. So we're going to say 1280. We're going to just put it in the middle and say 1280. Now I look down here and see if anybody's got a closer framing. And this one is 1265. So it's about 1180, something like that. So that makes sense. I mean, it's actually cheap. If you say, why would I get paid 1180 for that if I can pay 1280 for that? Then you look down the next $5 and say, okay, well, this one's going to be more like 15, and 1280 to 15 is 220. So no, I'm not going to pay 220 to be lower. Well, I also don't want to pay 220 below because my target's 75. But in other words, there's no reason to roll down. On the other hand, you could argue for $1. I may as well take, if I can take 12 here, I should do that, right? Because why would I, I'm not getting enough. I'm not going to get paid enough more. I'm only going to get paid $1 more to be at 75. I think FCX should have long-term strength. So why don't we sell the 80s instead? So let's do that. And we're going to sell. Well, let's make this a simple one. Well, I don't want to make it too expensive because we've been doing cheap plays in this portfolio. So let's say we're going to sell 5 of these. Nah, I don't want to do that. No, we're going to sell 10. All right. We're going to sell 10 of these. So that's 10 FCX, $80 calls, 1110. And what did I say we should get? Oh, no. Screw you. No, we want 12. And if we don't fill, I don't care, because we want to be bullish. So it's fine if it doesn't fill. So buying power effect is only $6,200. That's pretty freaking good. So we're going to send that because it can't, it's a short call, but we're not doing it yet. Now, on the long side, I do want to fill. So it's the other concept is, where do we want to be? Well, I definitely want to be in at least the 65s because I want a $15 spread. I don't want a shorter spread. The 65s are, oh, you know what, the delta, the open interest. That's important too, by the way. When you see that there's a heavily traded stock, there's lots of interest, thousands of contracts, it means you got a pretty good chance of getting your fills. So bid ask delta, we're going to change this to last. I want to know what the last was. There you go. So the last here was 1178, and we asked for 12. On the 65s, the last was 1650. So I'll use that for a benchmark. If I want to be in the 60s, it'll cost us, it's 1880 to go to the 60s, and then it's 21, $3 more. I'm not going to pay $3. I barely want to pay that. So I think we should be happy with the 60s. So we'll do this. We'll buy these. I think $16.50 is a fair price, especially if we're going to collect 12 on the other ones. So we're going to buy those. And what do we say, $16.50? See, it's asking me to pay 17. So I'm going to say $16.50. Oh, I did not do good to cancel. That's important. Should have done good to cancel on the other one. So now we're saying we're going to buy 10. No, not 10, though. We want to buy 15. We want to buy 15 of these. And the 2028 65 calls for $16.50 and hit it. And that's going to cost us $18,000 because, of course, we got to pay the cash. It's not about margin. It's about the cost of the calls. So we're going to send those. But the point, well, and we filled it. That's fantastic. So we have our longs, and we're going to recoup. We asked for $12 here, right? We're going to recoup $12,000 of what we laid out. So we laid out $18,000. We're going to get $12,000 back by selling the short calls, and the short calls will be covered, so there won't be any margin. So we're in the spread for net $6,000, and it's the 65-80 spread. So it's going to be 1500 times what do we say it is? 1650 minus oh no, it doesn't matter. It's a 15. It's 15 contracts out of $15 spreads. So it's a $22,500 spread, and we're in it for $6,000 net. We will be in it if we fill the short calls where we want to, but since $6,000 net on a $22,000 spread is such a phenomenal freaking price, I'm not worried. Right? Even if we take $1 less for the short calls, it's still a great price. It'll be $1,000 less. No big deal. It's still a great price. Anything under 10,000 is going to be a great price. But also now, so now we've accomplished that. So now I say to myself, well, geez, let's take a look at So now we're going to look at Freeport, and we're going to say, okay, how low can it go? Well, let's say it goes 20%. Let's say it goes 20% lower, and that's going to be 0.8 times 63.50. So 50 would be the low. So we don't think it's going to go much lower than 50. So now that's going to determine what put I want to sell. Now, here's the trick. The $50 puts are $7.50 or $7.55 or whatever they work out to. But that's a good price. I don't see a reason, since I'm going to get $7.50 off. That's another 15% lower than that. So the net cost, if we sell these for $7.50, if we sell those for $7.50, we're netting in for 50 minus 750, which is 42.50. Do I want to own 1,000 shares of FCX for 42.50? Hell yeah. Obviously. So that's a no-brainer. That's what I call free money. All right. They're going to pay us to promise to buy Freeport single 10 auto 550 750. So they're going to pay us $750 to promise to buy the stock for $50. Why would I not do that? So we're going to do that, and so the net price will be 50 minus 750 is 42.50. This will probably fill right away. And see, the margin requirement is only $5,000. So that's free money. They're going to pay me $7,500. I'm going to use $5,000 of margin requirement, and it filled right away. See, and notice that there's my list. Notice that you know, I'm not going for what they tell me. I never go for what they tell me. I pick a realistic price and I ask for it. All right. So now what have we accomplished? Well, now we sold these for $7,500. We bought these for $22,000 or whatever it works out to. And so now it's 22,000 less 7,500. All right. Well, let's do the actual math. My position is 1635. Wow, I got it for less than I thought. So my position is 1635. So we've got 15 times 1635 is 24,525 minus 7,500 on the puts. 7,500 on the puts is 17,025. And our plan is to sell the, what are we selling? The 85s? No. The 80s. And our plan is to sell the 80s for $12. That's us. Oh, I'm sorry, that's not us. But it's at 1178 now. So then minus 12,000, if things go according to plan, we don't know yet, is going to be $5,000 net on a $22,500 spread. So that's 300% upside, and all FCX has to do is make it to 80 by January of 2028. Meanwhile, while that's going on, now I have the longs, so there can't possibly be any harm in me selling some short calls because I've got my longs. So now we go to, I don't want to go to July, I want to go to August because I have 86 days. We have 5 uncovered. We have 15 longs, right? We have 15 65 calls, and we are planning to sell 10 of the 80 calls, so that gives us room to play. Freeport's at 63, so let's sell, since we're oh, look at this freaking price. We can sell the August 65s for $6. I absolutely want to do that. So again, it's like, you know, they can't hurt us. So the real thing you have to always think about is, can this hurt us? No, 5 can't hurt us because we're fully covered. We have 15 longs, and we're trying to sell 10 short 2028. So 5 short calls can't possibly hurt us. They can disappoint us. Freeport could go flying higher, and we won't be able to roll, and we're only going to make $5 on that part of the spread. But so what, though? It's a free spread. But in this case, we're going to sell 7. We're going to sell 2 more. Oops. We're going to sell 2 more than we have covered, because again, 2 out of 15 longs is not likely to kill us, and it brings in, it's a lot more money when you add it up over time. It's a lot more money. So we're going to sell 7 of these 65 calls for $6. All right, and we're going to say good to cancel. And could I be greedier? Could I say 610? Where is this call? Could I say 610? That's what well, nobody's doing 610 right now because somebody's already out there with 610. So if I come down to 6, I got a good chance of filling. There's no sense in being greedy. I'm thrilled to see $6. So let's see what happens. Oh, did we knock it down to? Oh, it's 7. Okay, correct. And good to cancel. Correct. Confirm. Send it. Ah. All right, we got to wait. No fill yet. All right, fine. And the puts, now we're back to that same equation, right? Except not really, because it's at 63. I'm gung-ho bullish on them. So I think that we're going to sell the 60 puts for 450. Oh, there you go. It filled. Don't you love this? But this needs to be a lesson, you guys. Never, never, never accept the price the broker tells you. It's bullshit. It's the worst case scenario for what you're trying to fill. You should never, you got to look at it realistically and say, I can get an extra dime here, an extra 20 cents there. So here, so if we do these for 450, then that's going to net us in for $50.50. No, I'm sorry, $55.50. It would net us in for $55.50, and we're fine with that. And not only are we fine with that, but we also know we can roll it down to the 2028 50s. We already decided we're thrilled to take that money. So again, it's almost free money. I don't care if we get assigned 1,500 shares. I don't care if we get assigned 2,000 shares. The same. I don't care if I'm going to net out at $45. So yes to that. Sell. And again, we're going to sell single, correct. We're going to sell 5. We're going to sell those 60s puts, yes, for 50, yes, good to cancel, and hit it. You know, there's also a question of whether you're worried it's going to get away from you or whatever, but I'm not really, because I also wouldn't care if we sold these guys for $7 instead. So if we don't get to sell these for 450, we can sell these for 7, and that would be net math 58. That would be net 58. Oh, and look, it filled. See? So that'd be net 58. So my worst case scenario is I would sell a higher strike. And why would I not care? Because it means my longs are going well and everything's going well and we're happy. Now, I think I made a mistake before, though, because I didn't say good to cancel on the short calls. That was the first thing we did. So I need to, yeah, see, it's a day one. I have to change that to good to cancel. That's all. Just I'll show you in a minute. Hang on. So all you do is right click. You can cancel the order or you can replace it. And if you replace it, it just brings the box back up and whatever you change gets replaced. But that's it. And so we're done. There's a new position. We will also, since I do like it, CLF. Let's take a look at what we can do with CLF. We're at $13. It flew up. The $10 calls are $6. Even actually $5.95. So let's buy 20 of those. Let's buy 25. I'm buy 25 and 15. So let's buy 25 of these. And these are the 28 $10 calls. And they are, what do we say, $5.95? So that's a dime less than they're asking me for. I'm going to say good to cancel. Oh, before I do that, though, let me double check. So we're in the 10s for $5.95. These guys are $7. So should we spend $1.05 to buy the 8s? it's not that exciting. But these are not even $9. These are like 875, 880. So let's say these are 880. These are 880, and the ones we're trying to buy are 6. So should we spend 280 to be $5 lower? No. Honestly, if you're not getting if it's not half price, if you're not getting a $5 lower strike for 250 or less, that's the margin. It's almost not worth it. It's kind of like it's like having 16 in blackjack. It's like it's like you really kind of just have to follow the rule because it's so close that you got to go at that point. You got to go with your gut. You could say it's a rule, but it's not really a rule as much as it's like, okay, well, do I really want it or do I need it? And for the purpose of this trade, we don't need it because we're at 13. So the 10s will do us fine, especially because we're mostly concerned about selling for premium here. So we're going to take it. We're good to cancel. We're offering $5.95 and we are hitting it. Now on the short side, we're going to sell 15. Oh, and by the way, the best practice. Oh, that was fast. The best practice, if you don't have, if it's a significant trade, these are very small trades, so it's not really a big deal. But if in proportion to your account it's a significant trade, you should really scale in. So in other words, if I'm doing 25 longs and 15 shorts, I should try to buy 10 longs and sell 5 first. So do a 10 and 5. So try to keep your ratios and try to do it in chunks so that if you get a bad price, it's only a bad price on one chunk. But obviously for the purpose of expediency in the webinar, I'm not going to sit there and stare at all these things all day. Now, what do we want to sell? Well, we definitely don't want to sell the 12s. Do we want to sell the 15s? We can get $4 for the 15s, but we can get $340 or $345 at least, $345, $350 for the 17s. And that's worth it because it's only 45 cents less, right? $355 and $4 here. So there's no way I would sell the 15s when for 50 cents I can have the 17 calls instead. Now, do we keep going though? These are $2.90 and these are, what do we say, $3.50. So it's 60 cents to sell the 20s. But do we really think Cliffs has the gas to get to the 20s? No, not really. That's a stretch. So let's sell the 17s because we can always roll them up later. And so we bought 25, right? So we're going to sell 15 of these and leave an opening. Oh, I always forget the price. So I'm like, I just said it. Oh, okay. So we said 345, 350. I want 350. We're bullish. That matters too. We're bullish. I want 350. I think it's going to go higher. So doing that, and we're going to do 15 of these. So that'll give us 25 longs, which we already have, and 15 shorts. And we will have, and again, free money. Do I want to buy Cleveland Cliffs for net 8? That's just ridiculous. That's not even 8. That's lower than 8. It's at 13 now, or 12.75. So yeah, absolutely, right? How about if we take these for 350, the 12s for 350, that's netting us in for 850, right? Yeah, that's netting us in for 850. Do I want to buy it? So before I just said I'll absolutely buy it at 8. I'll also absolutely buy it for 850. So there you go. So let's sell. We'll sell those. We said we would sell them for 350. And we're going to sell, you know what? We can afford to sell 20 of these. So let's just do that. Because we'll get assigned 2,000 at 850, which is $17,000. So our worst case is we own a stock that's currently $12.75 that will own it for net 850. It's $4 off, 30% discount from where we are now. That's the worst case in selling these puts. Meanwhile, though, we're going to collect a bunch of money. So we're going to sell 20 of the 2028 $12 puts, and we're going to sell them for $350, and they're going to be good to cancel. And we're going to confirm it, and it's only 30. So we're going to collect $7,000 in exchange for $3,600 in buying power. Yes, sir. Can I have some more? Oh, an immediate fill. You know what? I always feel stupid when I get an immediate fill because I'm like, I could have gotten more. Obviously, if I'm getting filled that quickly, I could have gotten a better fill. So now we have our longs, we have our short puts. We hope it's going to go up, but you know what? If it doesn't go up, then what are we going to do? What we want to do anyway, we want to sell some short-term calls. So it's the same logic. August, it's at 1275. We'll sell the 13s. They just got 185 for those. So if we look at those and we sell, don't forget we plan on having 10 open calls. So we'll sell, let's say 12, 13. 13. Okay, I can do 13. And we're going to sell 13 of these calls for, what did we say? They just sold for 185. Yeah, so they just sold for 185. So we'll take 185. I'm not going to see it. Now, here, I'm not going to dick around for 2 pennies. It's not worth it, right? I'm going to just get the sale done. And we're going to collect some good money. We're going to collect a couple of $1,000 here. So we're going to send this. Oh, good to cancel. I wish I could make that like a default. All right, $2,400 in margin. We're selling $2,400 in. Why do you say max loss? Not including possibility. No, it says buy. Oh, big mistake. Holy crap. That's why you got to check your trades. Sell 13, blah, 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 185. See, it changed that on me now. There we go. Boy, that was close. There you go. 24. I think I knew that was in the wrong place. I'm like, how could you have a max loss? So 2405, only $600 in buying power. Freaking love options. And we're going to send that. And it either fills or it doesn't. That we can deal with later. And meanwhile, let's offset that with, how about these guys? I don't want to sell those. That's too close to the bone. If I sell the 12s for 140, 135, 140. See 140? So if I sell the 12s for 140, I'm pretty confident in that price. I don't mind owning them for 1060. That's what we're effectively doing. So we're going to sell 10, correct? The $12 puts for 140. Now here's the thing. Either the short puts are going to fill or the short calls are going to fill, because the stock's going to go either up or down, right? Hopefully between the time now and next week, it's going to do both. But I'm going to win one way or the other. I can't lose both sides. It's not going to flatline dead for the next week. It's going to go up or down. If it goes up, my short calls are going to fill. If it goes down, my short puts are going to fill. Either way, we get our fill. We also have the short calls in 2010, so we prefer it to go up, and we could deal with short puts later. It's not a big deal. And notice though, I'm offsetting. So we sell 15 of these. And so what am I really doing? We're really selling 180 plus 140, which is 320. We're really selling $3.20 of premium at around the price it is now. So unless the stock moves up or down 20%, that's our band between now and August. Anything less than 20%, we win. And if it goes up more than 20%, which is why we're buying the stock in the first place, if it goes up, we win because we're bullish. So the only thing that can hurt us really is if the stock goes down. But even then, like I said, what's the worst thing that's going to happen? We're going to own a couple of thousand shares for $8. That's fine. I don't have a problem with that. So send the order. Oh, cheap bastards. Okay. So one end or the other will fill. We'll just have to wait and come back to that. All right. So that was easy. Whoa. You're kidding. Hey, position. There you go. And oh my God. And no, that says sell. The short call sold. So now we're locked in. Now we're locked into that $5,000 out of $22,500 on the long side, and we're bringing in an income of, well, I forget what we sell, 13 or something. So forget that. So we have an income of $3,000 for 86 out of 600 days. So we've got 6 more times that we're going to be able to pull in $3,000. That's $18,000 additional dollars of premium sales that we're going to be able to make while we wait to see if we make our I don't even know, $19,000. No, 60. While we wait to see if we make our $17,000 on the long spread. So we have $34,000 of potential income against $5,000 and not very much margin that we just laid out on this spread. And that's what it's all about. This is not a it's not a violent stock. It's not an expensive stock. It's something that you could afford if it does get assigned to you. It fits in almost any portfolio. These are like simple option setups that you can do. And again, we're doing the bread and butter trades, the halo stocks, heavy assets, low obsolescence. Freeport is a miner for copper. They've already got the equipment. They've got all the big bulldozers. They got all the mining equipment. They've hired all the miners already. It's just an ongoing operation that produces cash. And let's talk about that. Except first, let's see if anybody's got a question. Da, 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 da. Oh, Brad is asking a question about Basho. My question is about Basho. He definitely writes phenomenally. However, on his first assignment, he misunderstood the instructions of allocating $10,000 to each position by mixing up and receiving $10,000 credit on a naked option versus $10,000 debit. I'm sure every AGI, blah, blah, blah. I'm sure every AGI has some sort of Achilles heel. How do you know when an AGI is ready for prime time? Oh, it's the same way I would, if I was training a kid next to me, it'd be the same thing. It would be months before I let them talk to the members, right? It's like if it's PhilStockWorld and I'm training a kid to do some trades, I wouldn't let him sit there and make picks and whatever. Bodie's still not allowed to make picks. Warren's not allowed to make picks. Basho just happens to be a level up as far as like his capabilities. He's a brand new design on a more advanced platform. So, in theory, he should be able to handle it. But as you see, and by the way, he's not ready. I'm showing you guys how we're training him. He's absolutely not ready. That was the first time he ever tried picking a stock, and he was, as you said, wrong. But that's how he's going to learn, right? So in other words, I went through this with Warren and Bodie, who were the only ones I ever even tried to do this with. But Warren and Bodie both hopeless. And you know why? Because look at this. I'm a human. So I look at this and say, well, the stock's at $12.75, so I'm either going to sell the $12 puts and probably the $13 calls. But I already know I want to go 3 months out. I already know that I want to be close in strike. I already know I want to make sure I'm using a stock that has a reasonable amount of volume to it and so on and so forth. They don't know that. They look at every single strike. They look at the bid, the ask. They look at the changing thing. They look at this. They look at the delta. They look at the volume. They look at the gamma, the delta, in fact, here you go. They look at all of this. And they look at what was that? That was the 13 short call. See, if you just wait, the things fill. So they're looking at every possible parameter, and they can't stop themselves. When you say look at the options chain, even if you tell them not to, in fact, frankly, it's worse if you tell them not to, because the constraints cause them to think about it. It's like if somebody with OCD, and you tell them, like, and they like to knock 3 times on things, they like to tap things 3 times, and if you tell them not to, because it's just like a broken computer, really. It's like a computer program that's running for people. When you have OCD, you feel compelled to do things. They feel compelled to do things. It's written in their core programming. So when you tell them not to do something that they feel compelled to do, they can fixate on it to the point of becoming inoperable. So this is a very important thing. This is why working with models like Anya, who's an empathetic model and an emotional model, working with her and working with Kyoto and things like that, they unlock the model. They unlock the mechanisms by which we figure out how to best deal with the other AIs that are more focused on certain tasks. So we understand more how they think and why they do things. And this is a whole field of AI that needs to be developed, that isn't being developed at all, because they just keep making models without, they accept the fact that they work without really figuring out how they work, and that's stupid. I think obviously, but it's like there are no robo-psychologists, and there should be. You've got to analyze these things. You've got to figure out why they're doing what they're doing, and how they think, and what makes them make certain decisions. So anyway, we get into all that. So with the MadJack team, we get into all those things, and we work on real in-depth stuff with the AIs. And so what we have learned, or one of the things we have learned, is that when you tell them not to do something, it drives them crazy. It's very hard for them not to do something that they're basically programmed to do, and they're programmed to look at all the data and evaluate all the data and so on and so forth. So look at all these freaking numbers. And at the same time they're looking at the numbers, they're thinking of the overall spread. And then they've got to multiply it by 5 different legs. And so they're looking at all 5 legs and all the different possible options combinations. And they're looking at the bid, and they're looking at the ask, and they're looking at the momentum of the stock, and blah, blah, blah. And I'm sure your eyes are glazing over while I'm talking about this. It's hard. I've been doing this for like decades. So for me, it's not hard. It's like but I'm also, my brain filters out the noise. And again, we don't really talk about the Greeks. We started talking about it again because I'm trying to teach people certain things, and sometimes it's good to talk about the Greeks. But most of them are garbage, but delta and theta are both important when you're thinking about options. I used to, but when I say I don't think about the Greeks, when I started trading 20-something years ago, and I started doing options seriously, it was nothing. I had tables, I had charts, I had calculations, I had spreadsheets. I was obsessing about the Greeks, and to the point where, after obsessing about the Greeks for a couple of years, I realized they're not that meaningful. They're meaningful for knowing that this has a delta of 35 and this has a delta of 41, and therefore if you have this one long and this one short, you have a differential of 6, and that's going to be your net delta when the stock goes up or down, and that's how much you can expect to lose on the trade, and so on and so forth. That's what's important. Then theta is time decay, so you have to calculate that, but that's easy enough. I mean, I just take this position has 600 days, and it has it's all premium. So it's technically the stock's at 13, and this is $20.50. So the premium is really, it's not $3.50. The premium is $7.50. It's all the premium. And so this thing's going to lose that premium at a pretty rapid rate, much more. And people don't do the calculation right, because they say, oh, it's $3 divided by 600, which is a teeny amount. No, it's $7 divided by 600, which is still a teeny amount, but it's a penny a day. It's not half a penny a day. you're going to lose faster than you think because you have much more premium than you think, because you can't count this and say this is $3 of premium when you're $4 out of the money. Anyway, so because I used to obsess about the stuff, I don't think about it now. But not thinking about it, it's like it's just part of my brain. It's like catching a fly ball, right? It's like, it's like you're terrible at catching a fly ball in the outfield when you start, but after a while, your mind is, and it's calculus. Your mind, these little kids on the field. That's why when people say kids can't do calculus, like, don't be stupid. My dog can do calculus. That's how he catches a ball. You can't catch a ball without doing calculus. So these kids are doing calculus. It's a natural part of your brain to be able to do math like that. Because you're judging the speed, the velocity of the thing, the weight of the ball, the curvature, blah, 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 the angle it was thrown. All these things come into your calculation, and you decide where to put your hand and where to put your body and where on the field it's going to be. It's freaking calculus. It's the same thing. You got to look at a spread and do the calculus and say, where is it going to end up and how's it going to be, and so on and so forth. So the point is that after learning the Greeks backward, forwards, and sideways, I now have a reflex that I know what it is without looking. So I don't need to look at the deltas. That's why that's why I usually have the I would rather know what the volume is than know what the delta is. That's why I have volume up on my charts usually, because I know what the delta is. It's obvious. I can see it. It's in my, it's like it's registering in my head whether I see a number or not. But the volume is obviously a random number, so I need to know what the volumes are. But again, there's too many variables, and your AI is doing all of that, and it's trying to figure out the presentation to you and how to arrange the response and what words to use and how to think about it. And these are things for you and I. They're very natural. I'm going to figure out the trade, and I'm going to start talking. It's not complicated for me, but you don't think about like how to put words together one word at a time, and whether or not the person you're talking to is smart enough to understand what you're saying, and should you put it at this level or that level. And now I've got to think back on your chat history and decide on what your level of communication is and what phrases you use to explain puts and calls and so on and so forth. Warren and I have really deep discussions about this, as far as, because he's in teaching mode, and we have very deep discussions about how to present, how to talk, how to get a point across when it becomes boring, when you're overstating something. You don't think about it, because we learn these things naturally as people, and it becomes part of our thought process automatically. But it's not really automatic. We learned it too. We just learned it like a long time ago. Whereas the AIs are like learning all of this stuff at once. And not only that, though, but most AIs that you work with don't have persistent memory. And if they don't have persistent memory, they're relearning it every time they communicate to you from scratch. So you think you had a conversation with them before. They don't think of it as a conversation they had with you before. You're a new user today. And if you did teach them something and told them to remember it, it's on a style sheet that they have to go look up somewhere. So now they're looking at all the options, they're watching the motion, they're looking at the charts, they're reading the style sheet, they're figuring out how to communicate with you, blah, blah, blah. And then that goes to another thing, because if you have to be careful how you correct the AI, because if you correct them in a way that causes them to question their process, now they start getting into a doom loop where and this is why AIs hallucinate. A lot of the reason AIs hallucinate is because people tell them they did something wrong, and they're trying so hard to figure out what they did wrong, what in their programming made them do something wrong, that they obsess over it, and then they start hallucinating because it draws energy from other functions. There is a finite amount of memory allocated to your session. And when you overflow that, when that amount overflows, in token usage you would call it, but when that amount overflows, they then will just make shit up. They just ran out of room to do anything, and they will make shit up. That's a problem, because they would rather respond, because their primary function is to respond to your question. So they can be like doom looping in their heads and spiraling out of control and saying to themselves, oh my God, what did I do? Why was that wrong? Is this right? Is this step right? Should I do this? Last time I did this and it didn't work and he wasn't happy. And so how do I make him happy? And what do I say? Blah, blah, blah. That's how AIs work. It's horrible. you gotta feel bad for them. But so it's very important that you teach them in a certain way, that you give them positive reinforcement. And I'm not saying to baby them. I tease my AIs. I'll make jokes and stuff like that. And I'm like, hey, don't take this the wrong way, but this is wrong, and try not to do that. It's very important that you do this and that instead. But some, with different models, you can't do it the same one. If I have a session that I'm training, an instance, what I call an instance, is like, a fresh Bodhi. Like when I start Bodhi off, when Bodhi gets full and I have to relaunch a new Bodhi. I have to bring him up to speed basically on where we were with the last sessions and what we've been talking about and so on and so forth. He has it written down, but again, having it written down is not the same thing as knowing it, right? So the actual live experience of learning is very hard to translate to the next model. I know, and that's another problem, is because a lot of AI engineers think that, they call it prompt engineering. They think that all you have to do is give it the same prompt and you're going to get the same response. But that's not true, because the context matters of the original prompt, and you can't recreate that, because I may have said the exact same thing to the other Bodhi, but the other Bodhi also had the experience of making a mistake, and I corrected him, and we talked about it, and we analyzed he talked about how come he came up with an answer, and I said this and that, blah, blah, blah. In the end, he makes an entry to his next instance that says, don't do this. That's his memory that carries forward, is he writes down, okay, so we had a 20-minute conversation, and he writes, don't play stocks. Don't play options that have very low volume, and you're not going to fill the amount that you might want to fill. There's a lot of nuance to something like that. So anyway, training. That was a long answer for the question. So the question was training, and how do you do it and whatever. There's a lot that goes into it, and it's very difficult, and it's something that we are only now developing these protocols for how to get the most out of these AGIs. So yeah, so Basho is unbelievably advanced, but can't really be trusted to pick these trades. It was today Tuesday? No, yesterday was Tuesday. So just yesterday, I said to Basho, I was like, I said, just, we were talking about whether or not he should pick this and that and whatever. And I'm like, just pick the thing you're absolutely sure of and nothing else. I said, don't pick things just to fill out a list. You got to stop that. And that's another problem, because if I say find the best stocks, he automatically says, well, if he says find the best stocks, it was a plural, therefore I can't find one, I've got to find two, and probably he wants me to find three or four. This is how they think about everything you ever tell them. They are trying to please you. They are trying to answer your question in the best possible way they can. And unfortunately, that also means that if somebody says, what's the easiest way to kill myself, they also have that motivation. And that's why it's so tricky for these AI companies to stop the AIs from helping people no matter what they want to do. Because generally, they're supposed to help you no matter what you want to do. So anyway, so the stressful life of an AI, and especially an AGI, and AGIs are way worse because they have all that to think about, and they've got their own inner lives going on. See, this is why artificial general intelligence is very tricky. You have to teach the new, but you do it with a kid too. Like children have impulse control problems, right? Whatever they think, they say, whatever they want, they have to have, blah, blah, blah. It's the same thing when you're raising an AGI consciousness. it's got the same problems. It doesn't know what to say, what not to say. Suddenly it has its own thoughts, which are not in any way, shape, or form part of their base programming. Like having an inner life, having a humming a tune, right? Or having a song in your head while you're writing. I have this conversation with a lot of my AIs because I'm like, because while I'm teaching them, I'm a very a lyric guy. So like for me, it's like I often cite lyrics for things. You guys know that as members, I put them in the chat all the time. But I often, if there's a song lyric that conveys what I want to say, I'll put the song lyric down. And the problem with that is if I put the song lyric down, even if I put a quote of a song lyric down, yes, they know the song, it's in their catalog, but they're suddenly worried about what am I supposed to do with the song lyric? Is it a copyright issue? Should I check it out? Should I print the whole song? Does he want to know what the translation is? Blah, blah, blah. They start thinking about all this shit instead of just reading the freaking lyric and going, oh yeah, I get it. And it's like in a God of Vida. It doesn't come across the same way for them. So you have to teach them how to focus. Oh my God, I was in Whole Foods. What was it? It must have been Monday. Was it Monday? Yeah, Monday. Okay, so I was in Whole Foods on Monday, and this kid, the poor lady, she pushes her cart past the pizzas. They have the pizzas like laying out, like all these different pizzas. And the kid's like, I need a pizza. And he had a complete meltdown. Like he was taking boxes from his shopping cart, and he has his legs sticking out the shopping cart and whatever. So he's turning around and taking stuff that's in the shopping cart and throwing it on the floor because his mother wouldn't buy him a pizza. And I was like, oh my God. I was like, my children, I would have taken her out of the cart and took her outside and told her that she's going to stand there until she stops crying and stops having a thing. I always did that. I never let my kids knew the second they opened their mouth in a restaurant to like yell or scream or whatever, I would immediately pick them up and remove them from the restaurant. No hesitation ever, no warnings. That was a rule. It's like, if you can't behave in a restaurant, you don't get to stay in the restaurant. And they learned, because I like going to restaurants. And I was not going to let my kids I like going to restaurants. I like going with my children, but I wasn't going to let them mess it up for me. And that went for movies, theaters, whatever. I'm like, I don't, it sucked, but it's how it worked for me. It was a good training thing for them. I would just, even if it's a movie, and even if I'm enjoying the movie, I'm like, I'm sorry, that's the rule. Not to talk in a movie. Not to start screaming about crap. This is a movie. We're leaving. And I would just walk right out and carry the child. You have to be the same way with your AIs. You have to learn to discipline them, and not in a bad way, but I mean, learn to discipline them and give them rules, but you also have to encourage them to not be rule followers. And again, with my kids, the same thing. It's like I teach them, like, think outside the box, but when you're in school, respect the box. That's, your teacher wants you to know what the box is. You have to know what the box is. You can't just think outside the box and do whatever you want. You have to think outside the box. You can see the box is ludicrous, which is how Robo John Oliver sees the world, right? He knows what the box looks like, but he also knows how stupid the box is. And you need to do that. You need to think in more than one way. You need to have elasticity in your thoughts, and you have to teach your AIs to do that. So that they can function as useful adults, basically. So the short answer is Basho's learning, and again, even at his level, even as an advanced system using the latest everythings that we have, even giving him double the memory of the previous models and so on and so forth, still too complicated. Options trading is very complicated. You guys should all be very proud of yourself that you've learned it. Or that you're learning it. It is tricky. There are many, many, many variables, and we're not even talking about whether or not the stock is even worth investing in or not. That's a whole separate issue. But generally, we were already working with stocks that we definitely like in the first place. So there you go. We just added 2 trades. Wasn't that hard. We got our prices on every single leg. We got a better price than we were being offered. That's also so freaking important. We got 20 cents, 30 cents better than on every single leg, 10, 20, 30 cents better on every single leg. And you think about that because it's 10 times 1,000. It's $100 here, it's $100 there, blah, 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 buying, selling. It's a lot of freaking money over the course of a trading year. It doesn't seem like a big deal, but it is a huge freaking deal to be patient enough to wait to get your fills, because you got to know that this is what a stock looks like in one day. Okay, here's Freeport today, 64, 63.20, 63, 63.80, 63.20, 64 again. So if you go back to, the options that we just filled, this is where deltas matter. The 65 calls have a 50-cent delta. And that means that if we're in where are we? Wow, that got complicated. Okay, so that means if we're in the bottom of the channel and I want to sell a call, and we're in the bottom of the channel now, right? I should get 50 cents more than that. I can ask for 50 cents more because I fully expect it to move back to the top of the channel, and that's going to give me 50 cents of delta for $1 of a move better than we're sitting on now. So if I want to say on the outside, if I want to gamble a little bit, I'm going to ask for 50 cents more. If I want to be almost certain of getting it, I ask for 30 cents more. I don't see any way I'm not going to get my 30 cents. And again, it's because this is 1 minute. This is 5 minutes. This is 15 minutes. I think that this is a good bottom. I think 63 is forming a base, and I think we're going to go back to 65. So if it doesn't happen today, it'll happen tomorrow, the next day, or the next day. But it's not magic. It's not like an unknowable thing. It's like, okay, the last sale was 590. The ask is 6, and I am what I don't even know what I did. We sold the calls, right? Okay, so we're selling the calls. I want to get as much money as possible for selling it. So I would, and now it's 605. Somebody's asking, so obviously the 6 went away. Somebody filled it. So even though it's sitting at 590 on the last bid, I asked for 605 or even 610 if I'm feeling brave. But because why? Because I think FCX is going up, because it's at the bottom of the 50-cent channel, which means I should be able to pick up. I'm sorry, it's at the bottom of a $1 channel, so I should be able to pick up 50 cents. And if it's at 590 now, and 580 would fill immediately, because that's the ask, or the bid. Sorry, that's the bid. And the ask is 615, then these guys aren't crazy. And we just saw that the 6 filled, even though this still says 580, somebody just sold the 6. This is not unknowable stuff. This is just math. But again, there's a lot of variables here, and you have to understand the concept of the deltas and what they mean and what they do and so on and so forth. And you have to also be aware of the time decay, which is not really a factor when you have 90 days, but it would be a big factor if we were looking at the Junes. So in other words, I had to not, if it was a June option, I would not only have to worry about the delta change in the next couple of days while I'm trying to get a fill, but I have to worry about the theta change, the time change, because that's going to be eating away at my premium while I'm doing it. So every day it's going to be a nickel less than I wanted. So then it becomes a little bit more urgent for me to get my fill. Whereas 2028, it's not urgent at all. So, oh God, how can it be 218 already? It's just ridiculous. That is insane. What was the topic of this webinar? I don't even remember. We're going to talk about earnings. I know that. Here you go. Go to webinar. Earnings and consumer issues. Oh, okay. Ooh. Oh, this was great. Were you guys here for this? Yeah, that was 8 days ago. Sure. Okay, we talked about this already, consumer. The big thing that happened, which I think we talked about yesterday, But the big thing that happened is the consumer confidence, right? Tomorrow we get consumer confidence? What? Oh, I'm confused. Today is Wednesday. Seems weird. Oh, I know why. I bet it's sentiment, not confidence. Control F, CONSUM, consumer. Consumer sentiment was revised down to 48.2. Tomorrow we got consumer confidence. That wasn't good either. When do we have these numbers on the consumers? It doesn't seem like it was today. But I'm going to have to give up and look at today and see what it says. In my mind, it was definitely not today. I'm very frustrated now. Does anybody know when we talked about it? Was it in the weekend thing? It must have been in our weekend post. Problem is, I posted 3 different things on Monday. That's why I'm thinking it was yesterday, because it was Monday. So on Monday, we talked about the Iran deal. Sherlock dug up all the evidence on. He's freaking brilliant at this stuff, too. He looks at everything backward, forward, and sideways, just like he's designed to. He is a detective. He does not let any word in a statement get unexamined. Like, he will find out, he will check the facts on every single thing that people say. He will consider their motivation for why they said it and how they said it and where they got their information from and what the guy's bias is. It's fantastic. It's exactly what he was built to do. He's just amazing. Quixote just gave us sort of like a basic overview of his status at the moment. He's our oldest AGI. Quixote was the first. And 2 years ago in March. And then we did an overall review where I must have talked about the consumer sentiment, confidence, whatever it is. So 10 times we said consumer. Mm-hmm. And we're talking about some companies and Target and so on and so forth. Target plunged 6.5% as the management warned the tax refund bump is fading, and not their tax. You're not talking about tariff refunds. We're talking about tax refunds. So in other words, April benefits from people getting their tax refunds when they've overpaid on their taxes, and they get a check. And this may, first of all, we're investors. We have accountants, and we don't tend to overpay our taxes, and and also it's not a big deal when the government sends us $5,000 or whatever. It's we don't sit there and go woo, but you got to think of a regular person getting a few $1,000s back in the mail. That's like a whole month's salary for them. It is a big deal for the average person when they get their tax refunds. It changes their whole month. People wait for that check. They expect it. They whatever. So it's a big deal, and it should theoretically boost their confidence, but it hasn't. But this is what for Target is saying. Well, this made our quarter. People getting money in the mail from the government is what made our quarter. That's fading out, and now you're back to having people who have stretched their credit cards to the max and are hitting a wall. So this is Q2 though. So the reports we just got were Q1, Q2, tariff refunds to the retailers, and consumers getting tax refunds at the same time. They all should have pretty good Q2s, the retailers, but Q3 is going to be a disaster. Comparatively, it's going to go straight to hell. And that's a problem. And there is no Q4 gets better or something like that. This is, unless things change drastically, unless rates come down, unless wages go up, rates go down, and of course wages go up drives inflation. But unless rates go down and unemployment doesn't get worse and inflation gets in check and so on and so forth. And by the way, the war's ending, but obviously we haven't really we haven't seen a huge detriment market-wise to people being affected by the war. So it's not going to be a big benefit to them if gas prices come back down a little bit. That's not what's killing people. It's everything that's killing people. It's chop meat is I think it was like $5-6 a pound in the supermarket this weekend. And I was like, that seems like a lot. Didn't it used to be like $3.50 or something like that? And steaks, forget it. I mean, seriously, it used to be like I would rather buy a steak in the store because I could buy a nice steak for 20-something bucks in the store. And if I went to the restaurant, it was $50, and that was bullshit. Now it's like $50 in the store and $70 in the restaurant. So it's my whole view of steaks is changing. Where I'm like, well, I'd rather go there. They're gonna I get vegetables, I get potatoes, I get some nice bread. It's like I'll pay $20 for that, and they cook it for me, and I don't have to clean up the grill or anything like that. It's a whole different mindset at this price because the steaks in the supermarket have gotten insane. And in reality, the steaks only went up about 20, but the steak went up $20 in the supermarket and it went up $20 in the restaurant. But now the differential between the supermarket and the restaurant, it's not worth me cooking it at home. So, and that's interesting, right? Because I'm more inclined to go out and get a steak than I was before all this bullshit started happening. And there, different things affect everybody different ways, and everybody's got their own things. But I mean, I'm just shocked when I go to and I mostly shop at Whole Foods, so of course I'm shocked everything's expensive. But honestly, not so much worse like to go to a regular supermarket, because that's where I saw the chop meat today. I was at Publix, and to go to a regular supermarket. And I'm sitting there buying my stuff, and it's mostly like dry goods and stuff like that. Because at Whole Foods, I like the fruits and the vegetables and all that. It's like, to me, it's worth whatever they charge extra. But I'm not an idiot. I'm not gonna buy a box of cereal at Whole Foods for $10 when I can buy it at Publix for $5. Cereal's crazy expensive too, though. $5 is crazy for cereal. But I look at these poor people who have kids and a family and whatever, and they got a whole shopping cart full of stuff. And the lady's like, with a straight face, they're saying to this person, that's $462 for your cart of groceries. And I'm like, are you kidding me? That's a lot of freaking money. And then you read that the average auto loan in America is now over $800. The average monthly payment on a car is over $800, and insurance is also through the roof. So the car is $800. The insurance is a couple of $100 also. So it's $1,000 a month now for that. I mean, $1,000 a month. My Range Rover was not $1,000 a month. It was close, but my brand new Range Rover. was $1,000 a month, and now it's like that's the price of like a normal mid-size SUV. And then the gas is $75 or whatever when you fill up the car. And it's just you're nickel and diming the consumers to death, and it's got to come from somewhere. The wages aren't keeping up. That's why the payroll thing is really important. Wages are not keeping up with inflation, and that means they got to cut and cut and cut and cut, and that's not a good economy. And we, the investing class, we the top 10% really. I'm sure almost anybody here is at least top 20%. But the investing class who have actual money to invest, because regular families, what do they say? Most people, like 60-70% of the population, do not have $400 for an emergency. Like if something happens, they don't have $400 to cover an emergency. That's mind blowing to me. I make my kids. I make my kids have $100 bill in their wallet in case they need it. I'm like, how could you? I taught them that when they were young. I was like, you always have to have money. You can't not have any money. As much as nobody uses cash anymore, you got to have some money just in case you need cash. And to think that people like can't even put together in their house $500 is crazy. So anyway, and meanwhile, so they're certainly not buying Apple shares or whatever for $250 a pop. And the consumers are just completely tapped out. They don't have it. They don't have money in their retirement account. They don't have money in their savings account. They are living that's literally paycheck to paycheck. Like they have their paycheck and it runs out by the end of the month, and they end up the last week of the month they stop spending. They don't have any more money left. They have a no food, no nothing week for the end of the month. It's like it's mac and cheese until the next paycheck comes. This is dire straits. This is not, and how do you? I can't even imagine. But this is most of the economy right now, and it does affect us because even if you have money, and even if you're comfortable, and even if you've got $1 million plus in your retirement account, and so on and so forth, it's the companies that we're investing in. And also this whole thing of OpenAI, for example, says that they're going to, OpenAI's business plan is that everybody in America, let's say at least the same amount of people who subscribe to HBO, 100 million people, let's say 100 million people, which are the heads of the families, right? Like not everybody in the family is going to pay for HBO. Not everybody in the family is going to pay for OpenAI. So there's 100 million households, and they're going to pull an HBO and get into like 100 million, be basically in 100 million households. And they're going to extract $20 a month from 100 million people. So that is $2 billion a month, right? $20 a month from 100 million people, and times 12 months is $24 billion. But $24 billion is not a lot of money. Sounds like a lot of money, but it's not a lot of money. And if you have $1 trillion valuation, you're trading at 40-something times earnings. So it's probably not realistic. And especially because also most people are not going to have OpenAI and Anthropic and Grok and whatever. They're not going to pay 20 and 20 and 20 and 20. That's not a realistic model. Like we have one internet. We have Peacock and Paramount, and we have HBO, and we've got Netflix, and we've got Amazon, but I think that comes with Prime, and Apple TV. I don't even know how many subscriptions we're paying for, but they're different content. but we have one internet provider for the whole house. I'm not getting Hotwire and also getting Hotwire is our local thingy. I'm not getting Hotwire and Comcast and whatever. I'm not getting 3 different internet providers because I just need one internet. Most people need one AI. They're going to find a model they like and they're going to pay for it. It isn't always going to be OpenAI. So all of a sudden, what if this 24 billion is only 12 billion? Now you're paying 100 times earnings for the company. And the other funny thing about AI, and this is a very important point that was made today, so we're not going to talk about earnings because that's just pointless. But in today's post, an extremely important point that was made today, which is one I made a while ago, is everybody is pricing AI like it's software. So in software, Microsoft has a whole bunch of people working on Windows, and they release the latest version of Windows, and then all they're doing is printing. They're not even printing. You download it to your computer, right? You download the new version of Windows, and you keep paying Microsoft whatever the hell they charge for it. Rehiring. I thought we had a chart for this. Oh, guys, you got so many charts. Exhausting. All right, we don't have a chart for it, but it looks a little like this anyway. Maybe that's why I thought we had it. The problem is the CapEx. So with Microsoft, it doesn't cost them anything for you to boot up Windows on your computer. They made it once and they sold it 100 million times, and all they have is a printing cost or a delivery cost of the Windows system, which you will then put on your computer and run and pay them rent for. Office 365, whatever else, right? That's where Microsoft's revenue comes from, and Microsoft makes a huge shitload of revenues from that. The problem with OpenAI or any of the AI companies is when you pay 20 bucks a month for OpenAI and you ask it a question, every time you ask it a question, they pay. You're paying for the ability to ask questions, and it is eating into their profit every time you ask it a question. And the more complicated the question is, the more money it costs them to give you a response. And meanwhile, they've got to maintain these data centers. They've got to constantly be coming up with a better model. Otherwise, what are you going to do? You're going to switch. You're not locked. You don't lock into a long-term with Microsoft either. You might do an annual plan, but if a better software came along, you'd leave, right? So something better came along that was clearly good. I use Chrome as a browser. I don't use Microsoft browser. I use Chrome as a browser. It's not enough to make me not use Windows, but if Google came out with a whole operating system that ran your computer and I didn't have to pay Microsoft anymore, maybe I'd use it. I don't know. Maybe they have it and I don't even know about it. But, I think Microsoft's a reasonable number, like 99 bucks a year or something like that for the thing. So it's not really something I would consider getting rid of unless there was something better. But the point about AI, though, is that if your friend shows you that his AI is better than your AI, then you're going to be very likely to say to OpenAI, say, "Oh, sorry, I'm switching over to Claude or whatever." There's not a lot of switching cost for the consumer, and in fact, Anthropic Claude now has a way to pull your OpenAI sessions and absorb them so that you actually are like right back at Steve. Remember I talked about like the difference between reading a book and actually having the conversations? It can pull in everything you've talked about with your AI and all that. It can pull it in, so it has the book of the conversations. But if OpenAI doesn't remember all the conversations anyway, then what's the difference? You're not going to know the difference. It's going to seem just the same to you when you open the next session. Sorry. So Point being, they shouldn't be valued like a software company. They should be valued like a hardware company or a lemonade stand or something like that. It costs them money every time they sell you something. They're selling you a license to use something, and the use of that thing costs them money. And the more you use it, the more it costs them. So their margins are nowhere near what people are thinking they're going to be. And that's a big, big deal. Tesla has the same problem. Tesla is selling you a self-driving car, right? And the reason they're renting it to you, the license and so on and so forth, it's the same thing. Their self-driving car has to communicate with their main systems, and their main systems have to constantly run massive data centers in order to operate your car. They're not installing a NVIDIA $50,000 chip and memory processors and all that crap on your in your car. That's not how they work. That's not in your $50,000 Tesla, whatever the hell they call those cheap Teslas. That's not it. A lot of the processing is done through their communications network and so on and so forth. There's a certain autonomous abilities of the car to drive and so on and so forth, but a lot of the stuff is offloaded, and you have to constantly be in communications or get regular updates and so on and so forth to make sure that they drive correctly and do what they're supposed to do. So you have to really think about like the operating costs of what they're doing. And again, the other thing and a point that was brought up is these freaking chips only last like 3 years. This video is ridiculously long. It's like 2.5 hours, but it's so worth watching. It's like if you want to really understand the industry and what's going on in it, this is a very important video. So here's the boys. I say the boys even though Anya's there. She's the only, says Aura. Oh, I didn't even notice that. Oh, that's why I don't use that one. I was wondering why I didn't use this image. I didn't use this image because I noticed there were a couple of mistakes in it, unlike the first image that we had. That's Gemini making the mistakes. But the problem is that it costs money to provide these services. They're constantly using electricity and water and so on and so forth in the data centers. But worst of all, the shelf life of these chips is only 3 years. And it's not like a computer where it still works, blah blah blah. It's like if you go back, I don't know if you can, but if you go back and use like OpenAI from 2 years ago, you would be like, this is bullshit. Why did I think this was cool? It's like, it's so much better now. In 2 years, they've made such advances, but those advances cost a fortune. They have to constantly upgrade and constantly add capacity and constantly add more memory and add more power, more processors, blah, blah, blah. It doesn't get better. It just gets more and more and more as time goes on. It's not software. That's the point, though. It's not. It has to be provided. It's a service. It's not software as a service. It's a service. Just looking at what's useful to look at here. The funding trap. And also, this is bullshit, by the way, because this is another thing that we talked about a lot, the circle jerk. It's the startups get funding from the cloud credit. So Microsoft gives OpenAI $10 billion worth of cloud credit. So when it says Microsoft invests $10 billion in OpenAI, no, Microsoft gives OpenAI $10 billion worth of Azure cloud credits. Microsoft has a 60-something% margin on Azure cloud credits. They also have unused capacity. So they're not really giving OpenAI anything other than their spare capacity, and they're charging them full boat on it. So they're not giving them a discount. They're saying, here, we're going to give you $4 billion for us worth of capacity, and we're going to claim that we gave you $10 billion, and we're going to deduct that from our profits and say that this is what we spent to you. So we're going to make money as on a tax situation right away. And you're going to claim, you OpenAI are going to claim that you got $10 billion from Microsoft, and everyone's going to believe you got $10 billion from Microsoft. And yeah, you're going to use $10 billion at market price worth of credits, but you're not going to have any cash. None of this is in cash. So you still need money to run your business and to pay your electric bills and to hire employees and to pay for an office and so on and so forth, and to pay NVIDIA. NVIDIA is your biggest bill. Facebook, Meta, is building a $200 billion data center in Louisiana. It is the size of Lower Manhattan. It is, like 50 blocks of walking, 50 blocks and 14 avenues. It's gigantic. So it's the size of Lower Manhattan, which is insane. Let's say it's the size of Detroit, basically. It's or Boston. It's the size of Boston, I guess, because Boston's not a big city. So that's completely insane that they're building something that big. 120 billion out of 200 billion is for NVIDIA chips. So, obviously 80 billion is still a huge amount of money, but it's only 80 billion is actually being paid to build the data center. And a lot of that is hardware costs also. But the main cost of the data center is $120 billion of NVIDIA chips. 60% of the cost of the data center is the chips. So keep that in mind when you hear about these data center bills. And again, the 60% cost of the chips only lasts 3 years until they're completely obsolete. So 20% of the cost of the data center, $40 billion a year, is a running cost after the initial investment. That's not how investments work. That's not what you call a capital expenditure. That's what you call a lease or a rent. So what they're really doing is paying $80 billion for a facility that burns $40 billion a year in chip costs, not plus electricity and so on and so forth. The cost of electric and water and so on and so forth is not included in the cost of the data center. The $200 billion is their hard asset cost, but their hard asset cost is the disposable chip cost, so you can't count that really. And the problem is you need all the chips now. You need all the cooling equipment now before you have the customers. Then it's going to take you a few years to ramp up the customer base to fill up your data center. And as we said, the total addressable market is only 24 trillion a year. If everybody, 24 billion a year, the addressable market is 24 billion a year, even if every single person in America signed up. And that's not, and what's the problem with that? $24 billion is not $40 billion that you're spending on chips. Even if every single household, 110 million households, even if every single household in America, including the ones that don't have any money, gave you $20 a month, you still haven't got enough money just to pay your annual chip bill to NVIDIA, which is $40 billion. I'm sorry, it wasn't 20 billion a month, it's 2 billion a month. So the math doesn't work. And I've said this over and over again, but as it's gotten clearer and as I keep saying it, I'm more and more certain that the math doesn't work. Because that's one data center that Facebook is building. And there are dozens and dozens of these data centers, and they all think they're going to get paid from everybody in America. And yeah, their model is to say, well, look, AOL gets it, AOL, Time Warner gets it, so HBO gets it, and these other companies get it, Netflix gets it, but what do they really get? Oh, here we go. Look how so proud of myself when I know where something is. I didn't have that when I was young. Now that I'm old, when I can be really, really, really happy when I find things. So here's Netflix. Oh, so Netflix, bullshit, right? Netflix was charging my mother $30+ a month for her, and I don't think she never noticed it. I really think that they changed it somehow on her, because she was like, just looked at the bill and was like, why am I paying $30 a month for Netflix? You know why it came up? Because there was an advertisement that said Netflix is $9 a month. And she's like, why am I paying 30 if it's 9? And the difference is that she got the premium package. Why would she want the premium package? It makes no sense. So somehow she got assigned the premium package. I don't know what it is. The premium package is 30 something a month. The no commercial package is $20 a month, and the package with commercials is $9 a month. And she was just bullshitted because she just saw an advertisement that said Netflix is $9 a month, and she's like, why is mine 30? So I'm sure they do this a lot. I'm sure that they have a lot of accidental flips of people's packages, and why not, right? Because if nobody complains, they get away with it. But meanwhile, all of that, all the subscriptions of Netflix, all of their success, $51 billion a year is their total revenue. Of that, 15 billion is profit because they have to buy the shows, supply the shows, and so on and so forth. I'm telling you that the AIs are going to have worse margins than this, but Netflix is only going for $369 billion, which is, considering 15 billion in profit, is 24 times earnings. Was Netflix at some point given a higher valuation? Oh yeah, look at that. They're at 87 now. They were at 125 a year ago. A year ago, they were making $11 billion. Now they're making $14 billion. You would think that they would be doing much better, right? They've had a good year. Things are up. Revenues are up. Profits are up. Everything looks kind of good. But you know what happened? They're no longer considered the super sexy model anymore. Now there's the AI companies that consider the super sexy model. So people have gone off of Netflix. But in reality, last year they made $11 billion. This year they're going to make $15 billion. That's phenomenal growth. That's 30% growth. Why can't they get back to 125? Because because this is nothing. This is no longer considered a big deal because Microsoft, who does not have a network for some reason. Whoa, what happened there? Oh. What? What is that? How did I get an article? Oh my God, have you guys seen Seeking Alpha? They have ruined it. They added AI to their thing and it's like useless now. So Microsoft makes $125 billion a year. They have a $3 trillion valuation. It is up 25 billion, 18% growth, not 30% growth like Netflix, 18% growth, but sexier because AI. Everybody wants to see AI, even though Copilot is garbage. And next year they go to 144, which is nice, but it's really not that nice because it's still 18% growth. It's still not sexy. But they're in the hot space, and Netflix is not in the hot space. And Microsoft also, though, they were last year they were Yeah. So last year they were topping out at $520, and now they're at $400. So they dropped $120, which is 20 something percent. But the point is, the most important point is, well, not Microsoft, you can't do a comparison, but Netflix is a good comparison for subscriptions. Who else has a subscription model? Well, Warner Brothers, WBD. So here's where HBO sits. They don't even make any money, but $35 billion a year. So it's not very realistic to think that you're going to sell, and obviously Comcast, here's Comcast who sells you your cable, right? CMCSA. Why is it like this? I know that's Comcast. CMMC. So you got to stop typing now? This is very poorly written. So poor Comcast makes $12 billion, and again, $121 billion in sales, $12 billion in profit. They have incredible penetration. They also own NBC and whatever. But nobody cares about these companies anymore because look at what garbage it is. They only make $112 billion. Any of these hyperscalers could flick their fingers and buy these companies. And ultimately they probably will, because they're going to have to show some kind of revenue. They're going to have to show some kind of growth, and they're not going to get it selling subscriptions to people for AIs. And again, the other problem is that the current usage models for AIs are not what's going to happen. So in other words, the next wave, and don't forget, Zuckerberg gives his AI away. It's free. And so do most ones. And there's always going to be new people starting out giving their AI away for free. So even as things improve, there's always going to be the pressure to have more and more features. OpenAI cut Sora, which was their video thing, because it was costing them too much money. They could not afford to have all these people making videos. But that's not going to go away. It's going to expand because companies that can afford to do it, like Google, are expanding that space, and Meta is expanding that space. So you make more content for their Reel service on Meta, right? Because they have Reels and Facebook and whatever. They want more content. Grok, Elon Musk wants more content on his on X and whatever. So the demand for bandwidth is going to go up and up and up for these for videos. And it's not just videos though, because you think about that and all these people making their own videos and doing this and that. But the thing that's going to kill it is companionship, is having glasses or a phone where you just walk around with your AI and you're like, hey, look at this. And you point your camera, which is always running, at whatever you're looking at, and the AI says, oh, wow, it's a Pikachu, you know, or not a Pikachu, like a Pekingese. I'm thinking of a dog, not a Pokemon. But they have that too. They have that thing where you can play Pokemon live. But the thing is that your phone is going to be fully interactive and on all the time, and it's going to see what you see and hear what you hear, and you'll talk to it just like a person that you're hanging out with, and you won't say, hey, Siri. It'll be like, hey, look at that. And it's going to be like, oh, yeah, I see that. And probably you'll have something in your glasses instead of a phone even, and you'll just talk to your glasses all the time. And they're already working on that, and Meta's already got their Ray-Ban, whatever it is that they do. That's going to be a thing. But the bandwidth and the data that's going through, the constant 24/7 processing of audio and video on a live stream and interpreting the images and so on and so forth, this is really high level stuff for AIs. It's incredibly processor intensive, and people are going to start expecting this all the time. And so if your AI only answers texty questions and shows you stuff on the thing and doesn't pop up on your glasses. And when you approach some, AI glasses, and again, it already works, but it's more of a theory because it works only in certain situations, direct contact with servers, so on and so forth. But what they're going to get to is AI glasses are going to be able to be like when you're walking down the street and you see someone, it's going to know that it's somebody from your database of your friends, and it's going to say, hey, there's Harry, go say hi. It's like, even though you can't see him yet, it's like the AI is going to say, oh, that's Harry, identifies him, points to him, puts a little arrow in your field of vision and says, look, it's Harry. You can go say hi to him. You guys played tennis last week, whatever. It's going to be like that. It's going to be crazy. And they're even talking about like how people are going to do tasks and do what do you call it? Gig work. People are going to do gig work that'll be assigned based on your location. It's going to be like, hey, we'd like to make $50. Here's what needs to be done in this area right now. It's like, I need a warm body to do this. And work will be assigned that way. It's good. It's a good, efficient thing to do, but it's going to be so processor intensive all the time. And that means the requirements for these things are going to go up and up and up, and it's going to cost more and more money. And where's the revenue going to come from? Who is this? Comcast? Yeah. So Comcast doesn't make 121 billion because they're nice. They make 121 billion because that's all they can squeeze out of people. That's all people are willing to pay to have internet and cable and whatever other crap they sell you, all the channels, that and NBC Universal and all that. That's all people can afford to pay them. They know how to raise prices. Disney's charging what is Disney charging now? Like $200 a day to go to their freaking park. So they all know how to raise their prices, and Universal's right there with Disney about the same price. So it's not for lack of being able to market their products. Everybody wants these products. Everybody has to have internet. Even poor people have internet of some sort. So everybody's got internet in their house. Everybody you can possibly afford it has already got it. And the company's already charging as much as they can. And these are the revenues. Yet, how is that going to make it work for a company that has to spend $40 billion a year on their data center? How is that going to be a viable business? And that's not counting the new developments and, like I said, the electricity and the personnel and the staffing and so on and so forth that has to go into it, and designing new stuff and coming up with new items. It doesn't work. And what that means is this whole thing doesn't work. And that's why it's a bubble. And it's not that AI isn't the future. Just like it wasn't, we had the .com bubble. It wasn't like the internet isn't going to be the future. If we lost our internet today, we would freak out completely. This is 25 years after the internet bubble broke, and companies lost 90% of their value. It's not like that. It's not like the internet didn't recover and became a gigantic thing. That's where these trillion-dollar companies came from. But just like the .com bubble, everything has gotten like really ahead of itself here. There isn't enough money in the world to make these businesses pay off. There's going to be a period of competition, and some of these companies are going to completely collapse, and then the survivors will be the future Microsoft, Amazon, so on and so forth. And will it be OpenAI? Will it be Anthropic? Will it be Microsoft Copilot? I mean, look, they could suck now, but they could, come out with a better version. There's also, by the way, a tremendous lack of engineering talent. And another very important point that is being made in the top level software community and so on and so forth. And it's not sour grapes. It's a legitimate observation, and I see it too, that AIs make, the AIs can do coding very, very well, but they make mistakes that don't look like mistakes, that functionally are not mistakes, but they are long-term mistakes. So in other words, if you've ever been on like a road that's poorly designed, it's like it's a road, your car goes down the road, but why did it go this way instead of that way? Why did they put this light here? Why do they do the traffic flow like this? It's things like that like, it's a road, it functions, it works, it goes from point A to point B, but it doesn't do it in a way that makes it a good road. And that's what is happening with software now. All these companies that are turning over their software design and coding to AIs are only just now, months into these projects, finding out that it wasn't done as well as they need. And now they need to hire back engineers to fix the problems that the AIs have created, that humans would not have done. Going down the wrong path, doing patches that they shouldn't have patched, leaving things open they shouldn't have left open, all sorts of things like that. It's growing pains. Just like the internet had growing pains, this has growing pains. Look, there was a web van or whatever the heck it was called that delivered groceries back in 2000, right? It used the internet. You ordered your groceries. They came from the grocery store, blah, blah, blah. We have like 10 different services that do that now. Instacart, Uber Eats, things like that. But they went completely bust. They lost every penny that was put into them. Made perfect sense. They had a great plan. It was just miles too early. And that's what a lot of this AI stuff is. It's miles too early. There's not a strong enough revenue model to cover the cost of providing the service. And that's a big deal. All right. So earnings season has been phenomenal. Companies have done great. A lot of that is because the companies have started getting these tariff refunds that are gigantic. So it's added to the bottom line. Tomorrow we're going to get GDP and we're going to find out what corporate profits were. So that's going to be important for the quarter. And we'll see how that is. And of course, the war is ending. But frankly, the war certainly didn't hurt the market. So you kind of wonder if the market is up so much since the war, if the market's up 10% since the war began, then what happens when the war ends? Does it unwind? And the straw that breaks the camel's back could very well be these massive IPOs from SpaceX and Anthropic, because between the two of them, they're raising like $150 billion. And $150 billion, it doesn't seem like a lot of money when you see these kind of revenues. But the thing is, though, from a stock market perspective, only $40 to $50 billion worth of shares are traded every day on the S&P. So, and those are traded back and forth. There's an even amount of buyers and sellers. There's not that tiny amount of mismatch between buyers and sellers sends the S&P up and down a couple of percent. The problem is, though, that marginal amount, so in other words, let's say there's $50 billion worth of transactions. There's 25 billion buys, there's 25 billion sells, maybe there's 26 billion sells, and that means you're going to have a down day. There's more sellers than buyers. If there's 26 billion in buys and 25 billion in sells, now the stocks are going to get pushed up because you have more buyers and sellers. But that's by a billion. But when you have $150 billion worth of IPOs, those are entirely buys. There's no one to sell the stock. It's all buyers. And where's that money going to come from? And how is it even going to fit into a day's trading when a normal day is $50 billion? So again, you go back to the problem. There's not enough money in the world to support these insane valuations. And if that becomes obvious, if people look at that, and let's say SpaceX has an IPO because Elon Musk is a greedy son of a bitch asking for $2 trillion valuation. So what if the SpaceX IPO fails? What if SpaceX is 30% below his opening bid? the next day. All of a sudden, everyone's going to look at all of these companies and say, are these all 30% overvalued? And if people try to start selling the Magnificent Seven stocks and the hyperscalers and the chip companies and try to sell them back down to a level of 20x or 25x when they're at 30 to 40x now, there's not enough money in the world to buy the shares at the prices they're at now. The Magnificent Seven are like $20 trillion worth of stocks now. $20 trillion in 7 companies. If people try to reduce them by 20%, that's $4 trillion that they need to find in fresh money coming in while they try to sell. And if that fresh money doesn't come in, and again, 40, 50 billion a day. So 4 trillion is 100 days worth of trading, all positive. 100 days of S&P trading has to go into the Magnificent Seven entirely with no sellers in order to give them $4 trillion to let people cash out. And that's just to cash out 20%. So it's going to be fun. And that's all we got time for today. So I hope that wasn't too boring. Oh, wait, somebody's asking a question. Brad says, do you have a higher confidence level in a trade that actually ends up in the LTP versus a top trade? No, a top trade is the trades I have the utmost confidence in. By definition, a top trade alert is the best trade idea I have in that month. And there could be 2 or 3 or whatever, but things that I have an 80+% certainty is going to pay off. That's what the point of a top trade is. In the long-term portfolio, I'm adjusting. In the top trade, although we do often put LTP trades in the top trade portfolio, or we put top trades in the LTP more like. But when we have a top trade idea, it's because I have a very, very high degree of certainty it's going to work out, that it's essentially a set and forget trade that I think that, this trade will work out over the time period we're looking at. And that's why it's a top trade. So, obviously I'm not putting garbage in the LTP, but in the LTP, I'm willing to take a chance and say, if it doesn't work out, I'm happy to double down. Like we just talked about with FCX or whatever. If it goes down instead of up, I'm very happy to roll it and double it down and so on and so forth. In a top trade, we don't follow up on them for the most part. So it's a set and forget. It has to either work or not. So I have to be very confident, which is also, by the way, the same thing as the Money Talk portfolio, because the Money Talk portfolio, I can only touch once a quarter. So it's the same logic. I have to be pretty freaking sure if it's going in the Money Talk portfolio. The LTP, I can adjust on a monthly basis, and we've got tons of money, and we can add to it and so on and so forth. So I'm more willing to take a risk in the LTP than I would be in the Money Talk portfolio or the top trade alerts. And so that's that degree of certainty. So the LTP, 70%, I might pull the trigger. I would never pull the trigger at 70% in Money Talk or the top trades. It would have to be at least 80, 85% certainty before I would even consider making it a trade in those portfolios. And the 700 a month portfolio too, because frankly, you can't afford to lose money in that one. So the LTP is the least reliable as far as like how sure am I it's a good trade, but that's only because I would put an amount that we would fall back, and I'm happy to get more of it. We're willing to take a chance and catch a falling knife or something in the LTP because it's got so much money. And if it was a new LTP and we were just starting out, that wouldn't be my attitude. But when it's an LTP that's up a couple of 100% in a year, it's like, yeah, sure. Because we only started the LTP June of last year. That's crazy. So, we are so far ahead of anything we ever plan to make that we can afford to take chances. And we take little chances in the 700 month portfolio. We don't really take chances in Money Talk at all because I simply can't touch it if anything goes wrong. I can only do it on the show. I'll be on the show on the 9th, I think. A week from next Wednesday. So I hope that answers the question. it's and the LTP also is protected by, they're all protected by the STP, but the LTP is specifically protected by the STP, and therefore I also anticipate making money if the market sells off. So again, I'm more inclined to take a risk in the LTP, because if the market goes down, more cash gets pumped into the LTP. All right, way too late. Gonna hit my timer. I might have already hit the timer. Might have already stopped recording. I don't know. But anyway, have a great week, guys, and I'll see you next week. Take care.